and welcome to this webinar. I've almost forgotten my words here. I'm staring at the chart since 6 o'clock this morning. I'm in a little world of my own at the moment. Anyway, this is the London Forex webinar, and as usual, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. If this is the first time that you're joining us, this is me, this is my husband David, and we will be running the webinar as a double act, really, darling, isn't it? We do a double act. Yes, we do a double act, a two-hander. And we'll be looking at the charts and the Forex market through the prism of volume price analysis, all supported by a fantastic quantum trading tools. Volume price analysis, I know most of you who come along are already familiar with the methodology that David and I use in our own trading, investing, and the analysis that is up on the various sites and sites that we write for. But in case you don't and you've not come across it before, it's a way of looking at the chart, using the price action, obviously, but also looking at the volume, because what volume does at the end of the day, it actually gives us an insight as to whether the price action that we're seeing is genuine or not. Is it authentic, or is it spoof? Is it a trick? But volume price analysis is price action and volume, but it's also candles and candle patterns, support and resistance, hugely important. Not just price-based support and resistance, but volume-based support and resistance, and also it has a concept of time. And I'm going to talk a little bit about time when we look at the charts, especially for the euro. It's the euro that we've been looking at this morning for all sorts of different reasons. And the reasons we're looking at the euro is because we have some very important fundamental news for the euro coming up in about less than an hour. So if you are in a euro trade at the moment, you may a sort of short-term trade, you may sort of like to take a look at the chart, see what's happening. And part of our analysis of the Forex market, so we have the technical analysis bit, which is volume price analysis. We look at the fundamentals, but we take it one stage further. We give it a three-dimensional approach, and that is look at related markets, because the capital markets are all interrelated. What's happening in one will be reflected in another, and certainly in the Forex market, the individual currencies and currency pairs will reflect sentiment. They will kind of tell you what's going on, as I said, in the broader market. Now, if you've not come across this approach before, either the VPA or this 3D approach, it's all up on Amazon in this series of books. You can buy them individually, but it's very cost effective to buy what we call the Forex Trading Library. It's, David, remind me again how much it is? $9.99. $9.99 is the digital version, and everything is explained there. And this is a slide from our education program. The books, traders ask me, can I just use the books or the Forex books, or do I have to progress to the Forex program, because we've actually put everything together in a very comprehensive program. And it's really pretty much up to you. We have traders who I know have been trading a little while, have taken the books, and the books kind of fill gaps in their knowledge, as it were, and they take elements of volume price analysis and they adopt it, they integrate it into an existing trading tactic, such as using Elliott wave or Wolf waves or Fibonacci. There are many ways of attacking a price chart. But there are also traders that then say, look, I just want a little bit more, and this is why we've put the program together. These are the four capital markets that I mentioned: equities, bonds, Forex sitting pretty much at the center, and commodities. And I said each of the everything is covered in the program. The indicators that we've developed to support our analysis and our method for Forex, we have developed 4 specific ones, which we put under the umbrella of currency dashboards. You can buy them individually, but what they do essentially is they deconstruct what is happening in the Forex market. We start off with the currency strength indicator. That tells us what an individual currency is doing. Is it being bought? Is it being sold? It's the first step in any analysis, and I will show how this indicator can it works on so many levels. It not only tells you what is being bought or sold in any particular time frame, but it also tells you what is not happening in a particular currency or a particular pair. Then we have the matrix, which ranks the performance of the 28 pairs that we focus on in this market. We have the array, which measures the momentum of any move that is underway, and then we have the heat map, which looks at the performance of the currencies across multiple time frames. These are the forex specific ones. These are the ones that we always start with, and there are other indicators to help us, as I said, with support and resistance. With are we looking at a trend? Are we looking at congestion? And increasingly volatility is a huge factor at the moment, and as I said before, and I will keep on saying until I'm blue in the face, you could make volatility can be your bestest friend, it can be your greatest enemy. The details of the indicators you can find at quantumtrading.com. You can buy one, you can buy a bundle, or you can opt for the full package. If you opt for the full package, all the indicators that we develop are added free to the full package. A lot of traders just start with one. They start usually with the currency strength indicator, and that's enough, and that's fine. But then they like to know a little bit more about what else we offer, and so if you buy anything, you will always be credited, and that credit put towards the bundle or the full package. There's 24/7 support, and all upgrades are included. Everything is covered by a 7-day money-back guarantee, and the platforms that we have available at the moment are MT45, NinjaTrader, TradingView, and we are working on TradeStation, which we're very, very excited about. The website, quantumtrading.com. As you can see here, it's got videos, support pages, everything you really need to know about the indicators. The program is quantumtradingeducation.com. The cost of the program includes a full package of trading indicators. You just have to decide which platform you would like to use. If you've bought anything from us, you will be credited, and that credit applied to the education program. And it really is all you need to know to trade forex with confidence. And of course, everything is covered by the 7-day money-back guarantee. And this is the website. And as you can see here, very, very comprehensive. Every aspect of trading, not just the technical side. You've got the psychology, you've got the fundamental aspect, and what I said earlier, you've got what we call the related markets, how everything actually fits together into this jigsaw, if you like. Trading is a bit like you have lots of different pieces, and you've really got to put them together to try and make a coherent picture of what is going on, in the time frame that you are looking to trade. And I think, this is my site, annacoogan.com, details of the books, analysis using VPA, using the indicators. The main blog tends to focus on commodities, stocks and indices, but I have dedicated Facebook pages for forex, commodities, stocks, and I have my own page, which I really must sort of start to, it's a kind of let it lapse a little bit, because there's a lot of content on all the other pages. David, anything you want to say to that before I move to the charts?
Hi everyone, and a very warm welcome from me. Good to have you along this morning. Glorious day here in Hampshire. Hope it's well with you, good where you are. Apologies, Michael. I gather it's not very nice where you are, so hopefully the weather will improve for you. Just picking up on the headlines, we'll go through that as we go through the session. So I'm going to pass back to Anna. If you have any questions, just drop them in the chat box for us. Happy to answer them there. If they're longer questions, we'll answer them for you. So I'll pass back to Anna. Anna's on MT5. I've got NinjaTrader running as usual, and there's plenty going on. I think the main focus this morning has been euro, really. Looking across the markets, pound still under pressure. There's been we had the FOMC minutes last night, and we've obviously got ongoing Brexit discussions. And the big news today, or the fundamental news at any rate, is for the euro, with flash PMI due up for France, but the major one is obviously Germany, which is due up at 8:30 our time. But we'll keep you posted on that. I'm heading back to Anna, and we'll get going.
Right. Last week, I started a sort of narrative, and a narrative that is also on my forex, and it's called Learn Forex Trading Facebook page, and that is the use of multiple time frames, and in particular time frames that perhaps can move you slightly away from the faster charts, so sort of rather than just focusing on maybe the ones, the twos, the 3, the 5-minute charts, moving to the slower time frames, and how potentially we could pick up potential trades using first of all the CSI, then the matrix, and then putting the other charts next to, in context of what we're seeing on the hourly charts. Also, not only for entries, but also for helping us, helping to keep us in a trade. And what I've done is I'm just going to, this is what's been happening this morning. As I said, the focus is on the euro, but it's not the euro dollar. And I just want to say a couple of things about the euro. The euro dollar is in a lot of traders gravitate to the euro dollar. And I can understand why, because brokers offer very, very competitive spreads. It is the most the heavily traded of the forex pairs, and as I said, driven primarily by the spreads. But when you get a situation where a euro dollar is constrained in a range, and it is strange in a lot of cases. I mean, yesterday, even with the release of the FOMC, it didn't move more than 20 pips. I think all week it's moved 60 pips, David, or so, and that can be very, very frustrating. And which is a shame, because the euro does move, but it doesn't always move against the US dollar. And as I said, there are all sorts of reasons for that. So as a trader, if you are going to look at euro, don't just focus on the euro dollar. Perhaps look at one or two other euro pairs, maybe euro yen, maybe, as I said here, the euro against the commodity dollars, and I hope if I explain what I saw this morning, what's happening now in the Euro Aussie. David, I think, has got the Euro Zealand. There's been a move also now in the Euro Yen. We haven't even looked at the Euro Dollar. It doesn't mean to say that we won't, but it's just at the moment, it's not really delivering. And if you're focused on that just one, you can get very frustrated. And that frustration, you will then start to enter trades, and they will go against you, and etc., etc. The emotions, you think, oh, you just get, as I said, the boredom and frustration are the two emotions that could really wreck your trading progress, as it were. And what we want to do is eliminate those from our trading, and know how to manage them. And one of the ways we can manage them is to look at at other pairs. Now, I know you've got the issue of the spreads, but these pairs offer some decent pips, and I'm not talking 3 or 4, 5 or 6. I'm talking 30, 40, 50, 60 pips. I mean, if you go back to my forex page on Facebook, I did a whole narrative on the it was actually the pound Aussie over a week. It was sort of swinging in a very big looping moves, and on one day in this beginning in the European session, by the time we got to the US session, it had put on almost 100 pips. And I'm not saying that's going to happen every day, but it's just to give you some a comparison of what what is actually happening on the other pairs. Right, I'm just going to take this chart away for a second and come back to it, because let me just dock it. Now with MT5, what you can do, they have a facility called docking. You click it and you just move it over onto another screen, and then you can just bring it back. Right, this is the hourly CSI. I have actually two indicators on this chart. I have the CSI itself, which, as I said, tells me what the individual currencies are doing. At 6 o'clock this morning, when I turned on my computer, what had been happening in the in the markets, and this is what all these lines. Excuse me. This is what all these lines tell me. Now, what I'm actually looking for on this particular indicator is I'm looking for a degree of divergence. What I don't want to see particularly is lines moving in parallel, because that tells me that on this particular chart we have congestion. When they're moving together, there's no divergence. So what am I seeing here? So I'm seeing the yen. Well, that was climbing. I've got the dollar and the euro. And it looks as though maybe we're getting some divergence on the euro dollar. But when I looked at it this morning, nothing much was happening. What else is happening at the other end? Well, I can see the Aussie has been sold off. Then we've got a little turn on it here, so there's been some Aussie buy. What you can do is if you just hover your cursor over the line itself, you can pick up the time. So if we can see here, this says 8 o'clock, but it's actually 6 o'clock my local time, because the way Meta quotes how you interpret the timestamp on these charts, there's two ways. It's either broker time or is it Meta quote server time, isn't it, David? But essentially, when that comes up at 8 o'clock, that is actually 6 o'clock where I am here in the UK. And there was a sort of turn in the the Aussie was moving up. Here on the euro at 8 o'clock at the same time, we can see it has been climbing, then it sort of flattened a bit, and then suddenly we've had this very strong sell-off in the euro that we can see here. So that tells me what the performance of these, what is happening with these particular currencies. We can see here as well, when was the selling starting in the pound? It was at the same time. But you've got a sharper angle on the euro, a much deeper angle and a deeper fall in the euro. So what we do is we hop over to the matrix and we see how is this, how does this flow in and out of the euro? How is it represented in the actual pairs themselves? And we can see here, this is the euro New Zealand and the euro Aussie. Now, don't forget, this is the hourly chart. So this is still, reflecting when the euro has been bought in the Asian session. So it hasn't actually started to roll over on the matrix, but it tells us what the position is for the individual pairs. So in fact, what it also tells us, the pair that we perhaps selected from the CSI, is it at a position on the matrix where it is likely to offer a potential for a reversal. In fact, as I'm speaking, the euro Aussie has actually dropped one space. So the two pairs that we selected this morning look to be fairly good candidates for a particular a potential trade. Then this is where multiple time frames come in. As I said, with VPA, we talk about time. We talk about time in the sense of not only timing, but multiple time frames, because relying on one chart is really not going to get you very far, because we can see what's happening on one chart, but we need to try and get an entry for, based on the analysis that we see on the chart in question. So what I've done here, I then just have one chart here, and I just use the market watch feature that you have on MT45, and I just drag over. Sometimes, when something that isn't very apparent immediately on the CSI, I just have the three CSIs in the background. The hourly one is my focus one. I then use the market watch, and I simply pull over the charts, the hourly charts for the various pairs, and I look at them in the context of VPA, candle patterns. What am I actually seeing? What are the indicators telling me? To really sort of match what I'm seeing on the CSI as well. Finally, with the CSI, we haven't really got a good example of this at the moment, or certainly on the hour, and that is when you have a cross of the CSI. When you have the two lines crossing on the CSI, what that is telling you is that the trend is already underway in those two currencies, and often traders think, oh well, the trend is underway, I've clearly missed it, what am I going to do? Well, this is the hourly chart, and nothing, no chart moves up and down in a straight line. It will move either up or down, then it will move sideways, and then it will either resume the original travel, or it will reverse. And in fact, we've had a really nice example of the 3 minute. Now, the 3 minute chart here is the move lower in euro dollar has actually already started, and we have the trend monitor here. I'll just hover it. That was at 6:30. So if you didn't come to your screen until after 6 o'clock and you say, oh my goodness, well, I've missed this move already, this is the little bit of move down, and you think, well, where am I going to get in here? Well, there are a couple of sort of potential entry points. One of them is this candle here, where you have effort to rise and you have a big wick to the top of the candle with a lot of volume underneath it. And in a trend lower, this can often be a really nice candle to consider. But more importantly, we have our volume point of control. This is where we look at time, price, and volume. And you know, when I said we have congestion, we have price-based congestion, we also have volume-based congestion. When you see a VPOC in this kind of move lower, you have this candle and you see this indicator, and price is kind of moving sideways. There's a degree of agreement, if you like, at this particular point in this move, but then it starts to break away and you have rising volume in the breakaway. That is your clue that possibly you could actually enter this move lower. And in fact, it was also highlighted on the faster CSIs. Now, this move here, you know, as I said, as traders, forex traders, all we can ever do is hope to take slithers of price action, because this market never stops. It's in a continuum. So we have 63.82, this little bit here, then it went back into a congestion, and where are we? 63.65. Where are we? 63.82, 63. So in there, I'm not saying, you know, you would have the whole 20 pips or so, but it's a lot more than the whole of euro dollar offered yesterday. What also happens with the indicators is, you can see here there's the trend monitor. Although we had this effort to rise, we had it looked like it was going to move higher. We had a lot of volume coming in here. It didn't actually go very far. In fact, we even had a bullish engulfing candle here. The trend monitor actually has stayed consistently red. Then we had another effort we had this bullish engulfing, but then we had a candle to the wick to the top. We had a sort of, you can't really say it's a shooting star, because shooting star is at the top of a trend, but it's certainly weakness coming in, more congestion, and then we've had the fall lower. Now, what's interesting, when I talked about time and timing, in the forex market, there's one aspect of time that you really have to be very aware of, and that is the session times. Because, and you can look at it yourself and you can prove this to yourself. We've seen this move start really at 6 o'clock this morning, and it's been a great move in the Euro Aussie for all sorts of different reasons, technical reasons, fundamental reasons. We're now coming up to the London Open, and we're also coming up to a piece of vital fundamental news. But even if we didn't have the news and the London Open goes through, this is a cross pair anyway. So the cross pairs in the London Open, you're going to get a lot of volatility around the pound. You know, Euro Aussie, Euro New Zealand can sometimes slip under the radar, as it were. But by the time it comes to the start of the US session, the moves that you have in the morning, by the time we come to New York, will completely, it can change, literally, it completely flip, and it will go completely the other way. So timing, in the sense of being aware of session times, is something that you also need to factor in when you are trading. And in a way, although this market is sold as trading anytime, anywhere, any place, like the old Martini ad of many years ago, which is true, it's almost easier if you actually approach this as if you were going to work. So if you're in a time zone that takes in the end of Asia, the beginning of Europe, and beginning of London, you set yourself, you go to work, and you say, I start at 5:30, 6 o'clock. I know when Europe opens, then I've got the London Open, and that's when I'm in the office. That's when I'm in my trading office, and then that's it. Then you pause, and then you wait until the US session, give yourself a break, or if it's the US session that you want to trade, fine. But then you also have to look at, well, what are the currencies that are going to be take center stage in the US session? Obviously the dollar, clearly the Canadian dollar, and so on and so on. So as I said, timing is not just about timing your entries and exits, but it's also time as it applies to the session times. Right, moving back to the Euro Aussie, as I said, let's look at the hourly chart. What did we have here? This was the move higher that was overnight in Asia. Euro is actually being bought. As we can see here, the euro was rising strongly in Asia. The Aussie was falling strongly in Asia. Then what did we have? Well, we had a sort of hanging man candle here, a lot of volume underneath it. Then we had a small shooting star, reasonable amount of volume, wick to the top. And this is the move that we have been looking at since, as I said, 6 o'clock this morning. And there's been enough in that move to certainly take, certainly more than you would find in a euro dollar. And the charts that I actually use, the time for my time frames, I have the hour. I then have the 12-minute chart, which is here, and in fact this is the 12-minute chart. This is the 2-bar reversal. This is the really nice trend higher in the euro dollar. It's a trend without volatility. Yes, there was a little pullback. It looked like it was going to top out at this level here at 163.85, but it did carry on higher. Lots of volume going in. What's interesting about this chart is this is Asia. Look at the volume going in there, but look at the candles. The candles are getting very, very narrow. What is that telling you? From a VPA perspective, it's telling you this move is, it's being pushed higher, but it's struggling. All this volume going in, you should have nice, big, tall candles. What you have very squashed candles, and you know that at some point this is going to roll over, which we saw on the CSI. Then we have the 2-bar reversal, and this is the move that we have. You could have either captured it here on the 2-bar reversal using the CSI on the hour, and also obviously on the 12-minute. This is the move. This is the nice down move we've had. Now we've had a bit of congestion. We haven't got down to the volume point of control here, which is on the 12-minute chart, and then the 3-minute chart, as I said. Okay, let's just move that. Let's have a look at that. There we are. So we have this area, this up here. It's not such a strong set of candles with the volume, because this is the 3-minute chart. But at this point here, you have, I wouldn't say this is a 2-bar reversal. All we can say is we have this up candle here, which is nice and wide, and you have kind of volume falling away as the candles move higher. But if you use multiple time frames, as I said, you will get a better sense of when it is likely to roll over, and obviously the CSI will help you in that decision making as well. Now, if you'd moved this bit, if you had missed this bit of the trend lower, as I said, nothing moves in a straight line. For a trend, it will move, then it will move, then it'll go. You have a degree of congestion. This is the congestion that we have being picked up by here, back here as well. Use the VPOC in this way, as I said. Then we had the breakaway on rising volume, and as I said, now we're going effort to rise, pull back, but because we're coming up to the London session, we will see if in fact we are in line for a nice reversal higher.
Wow, thank you very much. I think Anna's covered everything there. Just to, as Anna said, we've got the London Open coming up, so there's bound to be volatility, trap moves all over the place as usual. It's an ideal opportunity for the market makers to get in and make some quick bucks, which they do every single day, certainly around the London Open and the US Open, and indeed the European Open also. Just looking at that chart there, what you've got over the last 2 candles, the current one's currently forming. But over the last 2, you've got a move higher. So on the first candle, you've got decent volume, although it's below average at the moment. And then the next candle, you've got, I wouldn't hesitate to call it a widespread up candle, but nevertheless, it's wider than the previous one, and the actual volume is falling away there. So hardly indicative of strength in the move. What you've also got to keep an eye on is obviously the trend monitor. The trend monitor is remaining generally red. What's interesting is that, as you can see there, you've gone through some congestion phases. The trend monitor has transitioned through to a darker color. It's gone to darker blue on both occasions. It's actually skipped the darker red here, but it's gone into darker blue. But nevertheless, it hasn't actually come out the other side. and converted into a full-blown reversal into a bullish trend, in other words, moving to bright blue. And that is a key for the trend monitor. It's designed with one simple objective: to try to help to keep you in through these phases of price action. If you're short and the market goes into a congestion phase, your primary concern is whether this is going to reverse completely against you, or whether this is just simply a minor pullback reversal, which we get in all time frames, all markets. And it really is the key to success, to be honest, because if you can hold your nerve through these phases of congested price action, that is where you will make your money, because you're holding in. Whether you get in early, whether you like trading reversals, or whether you like trading trends, the key is you've got to stay in for the longer term. It's easier trading a reversal because by sheer virtue of the fact you are trading a reversal, you've got in early, and therefore the profitability that's developed from that particular tactic is going to be greater than if you're jumping into a trend that's already underway. But that's a personal choice. That said, the cost of entry to a reversal is much higher because you have to set a wider stop loss. So everything comes at a price. It's finding out what works for you, what you're comfortable with. But staying in the trend is absolutely key through all of these reversals and pullbacks, and trying to maximize whatever it is you can out of the developing move. And the trend monitor is key. Basically what happens is the trend dots and the trend monitor work together. The trend dots will always transition first because they are closest to the price action. Those are the little dots on the candles, and you'll find not only will they change color, but they'll also move above or below the particular candle to indicate whether it's selling pressure, buying pressure, or whether it's just in transition. In other words, in the midpoint of the candle where we're moving into a congestion phase. The trend monitor takes a more considered view of price action. It's much, as I say, it looks at a longer term basis, and it's trying to identify whether this congestion phase we're seeing is ultimately going to develop into a true reversal in trend, or whether it's simply a pause point. And of course, all of that comes together, which is another reason why multiple timeframes are so key, because what you see on a 1 minute chart, if it's a true reversal, will ripple through to a 3 minute, 5 minute, 15, 30, down to the hour, whatever it may be. And that is typical of any particular chart you care to look at. So, and also applies also to the indicators as well. Just up onto the 12 minute, there you can see again reflected with the trend monitor. The trend monitor supported throughout that move, indeed in the congestion phase, which was kind of overnight our time. In the little pause point, didn't even flicker, it's just carried on higher. Then we had the 2-bar reversal. Now it's starting to transition. It's gone into a darker red. And if this is a full-blown reversal into a full bearish trend, then that will transition through to the bright red in due course. Just go up onto a different time frame, up onto the hourly, and as you would expect on the hourly, really no flicker yet of a reversal into a bearish phase as of yet. And that is the key, because it just shows you across the time frames the ripple effect from the fastest right the way through down to the slowest. And the slowest one is always, in your trading time horizon, is always going to be the last one to react, of course. Anna's just going to pass over to me. Just switch off for a moment while she does that.
I didn't mention, just very quickly before we go over to David, what I didn't mention is what we also have is a Renko chart. Now, a Renko chart is devoid of time. And what it does, it helps you to refine your entries, as it were. As I said, it smooths out the noise of moves higher and moves lower. It does pick out these all-important congestion phases and opportunities to take a trade to the, as I said here, this is the nice move higher that we saw in Euro Aussie from last night and overnight. This is the little down move that we actually picked up. And what we're seeing now, this is the congestion that it's picked up in the on the 3 minute chart. The trend monitor hasn't actually changed yet, so it's still seeing that as a bearish move. Although the trend dots are changing now, and because it's the change over to London, and also we do have this key piece of news at the start. Is it 8:15, the first one? 7:15 GMT. So it's another 10 minutes or so. So if you've managed to capture that, great. Seeing the congestion, knowing that the news is coming up, you might think, do you know what? I'm really not going to not hang around, because fundamental news is going to cause volatility. It could carry on lower, or it could be the start of a reversal. And once everything's calmed down, you can go in again. But as I said, what the Renko does, it strips out time and also explains, as I said, charts don't go up in trends don't go up in straight lines. They move sideways, they take up the pace again, they sort of congest a little bit more, then they move again, and then you get a reversal. Support and resistance comes in again. This is price-based support and resistance. The thicker lines on this indicator highlight areas that are stronger because they've been tested more often. So you get a solid line. The hatch lines are, as I said, hatch lines, they're weaker. So when price approaches that, it's likely to go through more easily and more quickly. So that's MT5. Advantages of MT5 is you have obviously a greater choice of time frames. I've kind of settled for myself. I've got the hour. I use the daily. Obviously, you look at the daily for sort of broader context, but for the time that I'm going to be in any trade, it's the hour. I found the 12, I found the 3 minute, and I've got the Renko as well, and obviously all the CSIs as well. And my multiples are based on, they kind of follow a little bit sort of Alexander Elder's protocol, which is multiples of 4 and multiples of 6, isn't it, David? Multiples of 4 and 6. There's something he just suggested, but honestly, you can use whatever multiples you like, however many time frames that you can cope with. When we move over now to NinjaTrader, David has a completely different.
You should be seeing my screen. I'm just looking over on Anna's. Yeah, that's come up fine. Good. Okay. Sorry, I was just checking out what's going on in terms of US indices on Globex this morning, just to see what sentiment's like. It's fairly weak. The only reason I say that is because there's a headline come up on Talking Forex. Chinese Commerce Ministry said China will have to retaliate if US persists on current course. Not sure whether they're talking about probably talking about trade wars, or they might also be talking about the dollar as well and the yuan. Yeah. Yeah. As you can see, there's a lot of volatility. There's a lot of volume coming in. Big volume spike here as London gets underway. And this is the daily. We're flatlining in here at this level. So that just gives you a heads up in terms of sentiment. It's not looking particularly strong at the moment. Lots of resistance in the way, certainly on the daily perspective. Let's just head over onto the multiple workspaces. There we go. Right. Just pop that out of the way. I've actually pulled up cable because, as I said at the time, it's always like to have a view on pound, whether you're trading it or not. It's always interesting to see it at the London Open. Obviously, the European currencies are in focus. As I said when Anna was talking, always lots of volatility. Or just before she, I think I mentioned it just at the start there. As the London Open comes, we always get volatility. Typical trap move here. You can see it. This is the 1 minute, 2 minute, 5 minute across the top, and down the bottom I've got the 10, 15, and over onto daily. Typical trap move. Just bang that up full size. Whack it down to the downside. Traders will be jumping in. I mean, pound's pretty weak anyway against cable, but against other currencies also. Jag it down to the downside. Traders will be jumping in. Get trapped. Reverse it. Nice money up here, take out those trades straight away, then reverse it back down again. You know, this is typical stuff. This is 8 o'clock. The nice thing with Ninja, as I'm sure you know, is you actually see the print of your local time. So this is 8 o'clock. This is London getting underway. So we've now got 9 or 10 minutes of London time. We're trading around the volume point of control on the 1 minute. We've got pretty strong resistance in overhead on the accumulation distribution. We've got another support platform which might come into play here. But generally speaking, the pound is looking pretty weak, as it has been for some considerable period. Similar picture on 2. We had the trap down move, then jag it back up, and now we're reversing off and down into more volatility coming in. You can see it here on the 1 minute. We had the volatility trigger. The nice thing with the indicator, it triggers in real time. So you know instantly before the candles close. This was pretty quick. This was a 1 minute, obviously. But if you're trading a 5 or 10 or 15, you want to know that before it actually happens, because the prospect is twofold. First of all, the market makers are active, they're participating, and secondly, expect the markets to either congest or to reverse if in worst case if you're trading one direction and reversing in the other. It doesn't always happen. As you can see here on 1 minute, this is purely on the 1 minute time frame. We've not got volatility on 2. So what this is really telling you is, yes, we've got volatility on 1, but in terms of other time frames here, we haven't. So these are all genuine moves. That's not to say we won't get volatility triggers. Be interesting to see if that does indeed occur. So I'll just stay with this for a moment. I've been tracking the Euro New Zealand. Anna's been on the Euro Aussie. I've been on Euro New Zealand. I'm just keeping an eye on the news rolling through, waiting for the PMI. French PMI comes up first, and then we've got the German, which is far more significant. Now, what is significant is in terms of volatility, and again, it's another reason for using multiple time frames. Here we go. We've got volatility, which is now triggered on 15. So bear in mind, we've got a little way for this candle to run. And what that's telling you straight away is that certainly on a slower time frame, we now have volatility. We are expecting some congestion to therefore follow. So if you're up on these faster time frames, what this is telling you is that be aware that of the prospects of congestion to follow, and it's another powerful reason for using multiple time frames. I've said this many times before. If I'm in a short position and I see volatility on a significant time frame in my trading window, then 99 times out of 100 I'll close out, take my profit off the table. I might leave something to run if I'm trading multiples, so I'll be scaling out. That's a personal choice. As you get started, if you're new to trading, then you'll probably just be trading one contract or one lot, one mini lot, one micro lot, whatever it may be. But gradually, as you develop, when you open positions, you might wish to scale in or you might wish to scale out. The two approaches are very, very different. But if you go in and you want looking to scale out, you might go in with 2 or 3, take maybe 2 off the table at this point and leave 1 to run. There are so many different ways of trading, and it's really finding what suits you, what you're comfortable with. What suits me may not suit you. It's as simple as that. You have to find your comfort zone and also enjoy what you're doing. If you find it stressful, if your mindset, your personality is not configured to be one where you're trading constantly in and out all day, if you're not comfortable with that, don't do it. It obviously doesn't suit you. A lot of traders do enjoy it. They trade the very fast time frames, even down to the sub-minute, 15, 30 seconds, which I'll do in the Ninja Trader session this afternoon. It's perfectly comfortable, perfectly enjoyable if you like trading at that speed. But if you don't force yourself to do it. It's not worth it. You won't enjoy it. You won't make money. And a lot of traders also believe mistakenly that that's what trading is about. The typical, I'm sure you've seen it, the trading pit, lots of huge amount of noise, a lot of adrenaline, a lot of anger in there, and a lot of movement, a lot of activity, trading in and out every 5 seconds, whatever it may be. Well, that's as maybe. It may suit some people, but if it doesn't suit you, don't do it. Look for a slower time horizon. The principles of volume price analysis and the principles of trading are identical. It doesn't matter what you're trading or in what time frame. All the same principles apply. Just keep an eye on that for a moment. Let me just head over onto the Euro New Zealand, which was certainly one of the pairs that was moving. Just see if that's what's happened to that post the London Open. Okay, we're in congestion. We've got, as you can see here, we've got, let's just pull that up for you. There we are, another nice trap move. Here we are, this is the London Open. Move through here to 810. We've got a nice volatility candle here. Everyone will be buying that. Bang, reversing off the volatility, and away we go. And the market makers have made another ton of money. It is very simple. Let's be honest, if you were a market maker, you would do it too. Why not? It's such a simple way to make money. Let's go down onto the 15. This is an interesting example of VPA in action and the opportunities it then delivers. This is overnight Asia, so 2 o'clock our time. We had this nice run up. This is 4:30, 5 o'clock in the morning now. And what I would draw your attention to here is really the run here and the volume profiles associated with the price action. We see a little bit of weakness coming on this candle. The next one looks fine, volume and price in agreement, so that's no problem at all. Then we get this big surge in volume. That is the first signal that this market is running into weakness. The market makers are selling out here. They're selling into weakness, the deep wick to the upper body, a nice volume candle. And what's interesting about it, if you compare this one with this one, I'm not saying we do, but I'm just saying from a comparative basis, bear in mind that this is Europe and this is now London. Look at the volume on this particular candle and the volume on this particular candle. So this is a very high candle. This is very high volume for a for an Asian session. Normally what happens is you expect the volumes to be sort of like this, and then as London and Europe comes in, this all gets compressed. So this really does demonstrate the amount of selling that went on in terms of this particular candle. We then get a follow-through candle. Look at the spread of the candle again. Narrow spread, even much narrower than the previous one, but the volume again is high. So these two together are giving you a straight heads up that this is selling. The market makers are getting out. They're not interested in taking this market higher. Then we get this tiny volume candle here on the next one. Just reinforces the fact we've now got falling volume against a rising market. And it's a question of just being patient. And then it's a question of where do you actually want to get into that particular move. And as Anna highlighted, the candles to look for, if you're not comfortable, and of course this would all have been signaled on the currency strength indicator, you would have seen the currencies themselves reaching extremes. Sorry, I'm just keeping an eye on the other screen. Okay, the French manufacturing's come in, the PMI 51, better than expected at 49.5 expected is coming at 51, so slightly better on the French, but it's the German one that will really move the market. So as I say, this would all have been available or certainly signaled on in terms of the currency strength index. It comes back to what I was saying earlier. If you're comfortable trading extremes, then you might well have seen these signals and perhaps got in somewhere here, maybe too early, and then you've got to wait for this congestion. You've got to wait for this buffering around, which always occurs. Currencies don't just roll over from overbought to oversold and back again, very neatly and smoothly. There's always congestion involved, which is why you have to set a wider stop loss to allow for all this congestion to continue. But the key is obviously at this point, you're in early. Once this market starts to break, you are in right at the top. Now, if you want to jump in as a trend trader, absolutely no problem. And the candles that Anna highlighted were these ones, these guys. This is where you see a market trying to rally. We're in a fall. We know we've got bearish price action. We're in a fall. The market's trying to rally. Decent volume under that one. It's not looking terribly strong. Then we get another one. Nice heavy selling under that candle. This one, good volume under the candle and a nice wide spread. Little wicks to top and bottom, but nothing major to worry about. Then the next one comes along, another one, effort to rally, knock back down, selling into weakness. Market makers are selling into a weak market. Off we go down to the downside and on we go. Then as we get down to this level, what have we got? Over the phase of price action, we've got falling volume as it moves deeper. And we know therefore for a fact that we are getting to a point where that selling pressure for the time being has diminished, it's drained away, and the market may well move into congestion and possibly, as we're seeing, a little bit of a reversal. A lot of volume under that candle. So we're now comparing like with like. This is 8 o'clock, so we can compare these two candles if you like. We had relatively low volume on the open. We've got much stronger volume on this one. It'll be interesting to see what happens on this particular candle. And it's obviously reacting to the European news. And we've got volatility triggers all over the place now. We've had it on 1, we've had a retracement in there. We've got volatility on 2. And we've got volatility on 5 as well now developing, and we're trading around the volume point of control. But obviously this market is now going to wait for the German data, which is due up in 10 minutes or so, half past. So that will be the big one. And it's against the backdrop. I'll just pull this over actually. Let's pull this onto the screen. There we go. This is Talking Forex. It's a great, if you don't have this, then I would urge you to get hold of it because it's a great news feed. You get it on Squawk as well. You get all the headlines. There's quite a lot of information in here about German finance ministry said that early indicators suggest sustained slowdown in the industrial sector. I think we all know that. Germany is probably moving into recession. So, he's just simply reinforcing the point. Let's move that out of the way again. There we go. Yeah. Okay, Euro Aussie. That's Euro New Zealand. The other one I was looking at, I'll go back to cable in a minute. The other one I was looking at was Euro Swiss. That was moving nicely. That's I'm sure that'll have done the same as Euro New Zealand and Euro Aussie. There we go. Ton and a half of volatility coming in. In fact, volatility pretty much across the piece here. You've got it here on 1, you've got it here on 2, you've got it on 5, got it on 10 and down onto 15. So it's a question of being careful. As you can see here, we've moved back up on 10. We're up at the volume point of control. So that's a reason for the markets probably to get congestion at that level. You've got a very, very strong platform of resistance in here at 1089. This is on the accumulation distribution indicator. It prints these levels in terms of their strength. In other words, these levels here are relatively minor. They're levels which have been tested or retested once or twice. But this level here, this guy here, is a very, very strong level. It's purely by dint of the fact that it is much, much thicker than the others. In other words, it's been tested multiple times, and therefore it's extremely strong. It's a great facet of the accumulation distribution indicator. It just prints that for you absolutely in terms of the strength versus the width of the line. So the wider the line, the stronger it is. And in addition to that, it's reinforced by the fact we're at the volume point of control. So at the very least, as the market gets up to this level, we are expecting congestion and the possibility of sideways, certainly with the news coming up in a few minutes' time, and then we will see what happens thereafter. 1.5 tons of volume coming in under that particular candle. If you were trading that long and you saw that coming in, it's time to either, as I say, leave some profit on the table, leave some points to run, or leave some lots to run, or close out completely. Wait, you can always jump back in once the market's moved on from the fundamental news. Just go and have a look at, let me go back to cable, see what's developing there. More volatility on cable. Volatility everywhere at the moment. And it's just a question of waiting and waiting and waiting. You can see it here. There we are. This was the move. Big move lower. Volatility triggered. Now it's going to take the market back up to the upside. So everyone will be jumping in here, going short because it's bearish, this market. Now we're seeing the strong reversal back up to the upside. Let's just go over onto the 4 indices. There we are. Just wait for them to load. Oh, sorry. Get that out of the way. There we go. We've got some selling of yen coming in, so risk sentiment is reversing a little bit. We've got, so you can see it here. This is part of the reason we've got very strong selling in the dollar right now. This is all on 5 minute. We've got some buying of the pound coming in. This is the move on euro that we've seen, triggered by the fundamental news. That's what we're seeing right now at the moment. But we're seeing some selling of the yen, so presumably indices have, let's just have a quick look at indices, see what sentiment's like there. There we go. Sentiment has spiked a little bit, and it always surprises traders to appreciate the fact that whilst the forex market trades 24/7, every other market is trading 24/7. These are the indices. These are the US indices. This is the YM. This is the Dow, the NASDAQ future, and the S&P 500 future. These are trading real time. This is risk on, risk off in real time. You know, the cash market's open at 2:30 our time, but 24/7 trading is available, and it tells you about risk sentiment. And forex traders are always surprised that these markets are even trading, and moreover, the fact that it reveals risk sentiment to them in terms of what they're trading. And look at the surge in volume we've got here. You know, there's not the US markets, everyone in the US at the moment, or pretty much anyone other than the West Coast probably, is fast asleep. You know, East Coast, they're not awake yet. This is going on, but this is real time. This is what's happening. This is what the market's sentiment is like. And in a way, it's exactly the same with the physical exchanges, because somewhere in the world, there will be a physical exchange trading and open. So sentiment is there 24/7. And it's something we teach very heavily in the Forex program, to understand about the related markets and how they are all linked together through the prism of risk on and risk off. It's really all it's about. It's money chasing yield. Is it chasing a higher yield, or is it looking for safe haven? That's what it comes down to, which is why the bond market is so important, which is why it's about risk, it's about risk assets, it's about risk currencies, and so on and so forth. How are we doing for time? 8:24. Okay, not long to run. Let's just go back onto Euro Aussie, which is another one. Okay. That's trading sideways for the time being. Again, nice trap moves on the volatility. Big trap move there, ton of volume underneath. You can see now we're trading within the spread of the candle, which is what we expect to see. It doesn't always happen. We had another one here. You can see this was, when was this? 720, spikes up, Whenever the market moves rapidly, you can guarantee that the market makers are participating either with a trap or they are participating genuinely, but either way they are there because it's an opportunity to make money. When the market moves quickly, there's one thing I can guarantee: your emotion will trigger a response. That's what it's designed to do. When you see something moving quickly, your primeval instinct is to do something. Doesn't matter whether you're trading or you're out hunting or whatever it is, that's your immediate response. And that's why it's such a powerful mechanism for the market makers. The market moves rapidly. You think this is going to be some easy money to make. I can't miss out. The fear of missing out on the trade, you jump in, bang, and the market reverses against you, and you're either stopped out or you're left regretting it, or a lot of emotional pressure if it does indeed move in the direction that you originally took, which it does from time to time. Of course, as it settles, as indeed here, for example, the market's rallied, the market's shot up very fast. Traders have jumped in here, maybe near the top. Okay, they might be all right for the time being, but there's a lot of emotional pressure. The trend monitor is signaling bullish intent. We've got a low volume node to the upside. We've got the volume point of control, which we like to trade around anyway. But if the market breaks above through here, then fine, all well and good. If you've jumped in long, there's the possibility that it might break, and if it does, you've got a low volume node ahead. So happy days if it does go that way. But this is a lot of pressure to take. All right, it's a minute, so we're in here for what, 10, 12 minutes or whatever it is. But this was a 5-minute chart, and you were sat here for an hour. That is true emotional pressure when you're trying to decide whether a market is going to rally or not. And really, just to put it all into context, this is where we are on the daily. And again, similar sort of thing here on the daily. You've got a volatility trigger here. Trading, we went outside it, come back down inside it. Again, we're still trading in here, bearish engulfing on this particular candle. We've got some minor resistance here, which is coming into play right now as I'm speaking. But in terms of where we're going at the moment, it's pretty constrained, and this is fairly narrow price action. It just puts everything into context when you have the daily chart up. Just stay with that for a few more minutes. How long have we got to go? Not long, another 3 minutes. Okay. Let's go back to the EUR in New Zealand. I'd imagine these are all doing pretty much the same. Yeah, and it's a question of waiting now for the next release to come along. Let's just go back to cable. The volatility candle still building. We've got the volatility candle on the 10-minute as well. And that's where we are in terms of the daily. Remaining very bearish. I put this chart up in the VPA traders room this morning. This is this is what's capping it off. It's a fairly minor level, but nevertheless it's there. You can see how often it's been tested. Here we are. You've got three or 4 days here, which has capped off progress. Trend monitor, as you would expect, has been steadfastly red throughout. We've got a minor transitional change coming here. We've got a little bit of buying under that particular candle over the last few days. And of course, all of this will be driven by Brexit. And the problem that a lot of traders will now have mentally is adjusting to the fact of potentially buying the pound, because when you get into a mindset of selling a particular currency relentlessly, as the pound has been and can likely continue to do so for the time being, it's very hard to get out of that mindset. It was the same was true of oil when that was being absolutely hammered. And every day you wake up, I'm going to trade oil, I'm going to short oil, short, and then at some point it reverses, and undoubtedly it will, and the pound will start to be bought again. And at that point, it's very hard to get out of that mindset, because you've been it's so ingrained in your psyche that short the particular currency or the particular market for so long. Can I pass back to you for a moment? Oh, leave it to me. Okay, fine. Okay, 1 minute to go. Okay, well, let me go back on to a euro. Bear with me a moment. Sorry, one of the dogs has just kicked off. Apologies. Anna's just picked up the news. It's coming as expected, pretty much. 43, is it 43 and something? Yeah. It's degrees of terribleness. Yeah, here we are. Flash PMI, okay. 43.6, 43. So, you know, it's a little bit better, but still pretty awful. Services is as expected. So, you know, it's there or thereabouts. Whether that will be enough to give the euro a bit of a boost, we will see over the next few minutes. Let's have a look at euro yen. Okay. Let's have a quick look at the CSI, see what's going on there. See if we look for some reversals. This is on 15. That was the yen selling that we're seeing on the yen index, which I mentioned earlier on. So you know, that will be reflected in terms of sentiment. You can see here we've got buying Aussie, we've got selling yen, so we've got Aussie yen. You've got spot for choice actually. You've got some. This is the buying in the pound. You can see the very strong selling of the dollar right now, so that's certainly helping the pound as well. We've got a cross there on cable, so we've got buying of pounds, selling of the dollar, so that's a decent move developing. That will also be reflected across onto the yen. So if you're looking at pound yen, that's coming up to a cross too. You can see literally they're kissing one another in the middle here, having a little peck on the cheek. You've got the euro rising here. So there's quite a lot going on here and plenty of opportunity to pick off those trades. Could step down onto the 10-minute, got the 5-minute backed off over here. That's the buying of the euro, very strongly oversold. That's bounced nicely, really strong buying. It's a nice steep incline, exactly the same as on the pound. And what's interesting, of course, is that when you're teasing out which pairs to look at, as Anna mentioned at the top of the show, don't look at those pairs which are traveling together. This is a classic example. You know, you might think that the euro is being bought universally. Well, it is, but in terms of where that is reflected most strongly from a trading perspective, it's not going to be against the pound because they are literally rising at the same pace. There might be some minor development of a trend on euro pound on 5-minute, but I can assure you at the moment that it'll be very minor compared to something like a euro Swiss or a euro yen or indeed a euro dollar even. And that's what you need to look for all the time. And as you can see here, the New Zealand Swiss is starting to dive. So euro New Zealand, there's a nice cross there. You'd be looking at that as well. The key thing you've also got to look at when you're looking at the currency strength indicator is this. It's where these crosses appear and therefore how much potential there is in the trade. And obviously you're going to use this in context with the chart. But when you look at something like, for example, the New Zealand here crossing the Aussie or crossing the Canadian dollar, it's quite high on the indicator, which tells you perhaps that the travel left on this particular currency, this has obviously got a long way to go if it's going to go all the way to the bottom. But the Canadian, for example, has less travel in it. So it does depend where that cross appears. This, for example, where we had the yen falling and the Canadian rising, this was pretty much central. This is 50, this is midpoint. It's not significant other than just to give you a sense of where that cross is occurring. So in other words, you've got an equal amount of buying here on the Canadian counterbalanced by an equal amount of selling on the yen. So if you're looking to jump into a cross, you know, I wouldn't suggest, for example, jumping into a cross where it's down at the bottom or up at the top. You know, look for those crosses where they are in more or less around the midpoint, because it gives you a better opportunity that trend is likely to develop and not be capped off by one of those currencies flagging and running out of puff before it gets to the other extreme or anywhere near it indeed. So just bear that in mind. Let's go up to the 10-minute, exactly the same here. We've got euro and pound rising very strongly, so it's not one to consider, but lots of other opportunities. Strong selling in the dollar, which will be helping cable, which is nice. And you can see the strong selling of the yen, which is continuing up onto 15. We've had that little kiss. We've got the crossover on euro, so euro yen, euro Swiss, you know, that's a nice move developing there, and so on and so forth. Let's just have a quick look at the currency arrays. Let's go to 10. There we are, 10-minute on the currency array. You can see, let's isolate out the euro, see that buying developing. Top of the tree, we've got New Zealand, euro New Zealand here. You can see them all. And you can also see the way the euro yen here is starting to track higher as well. So that's reflecting the fact that we've got euro buying and selling. And if all goes well, that'll join its brothers and sisters, and these will all sweep higher. The nice thing with the euro pair is that euro is always the primary currency. So in a perfect environment, all of these will gradually track higher and sit at ultimately to sit at the top of the ranking ladder. But what we can see at the moment is another key point, which is the euro is being bought universally at the moment. And it's a question of you then teasing out which is the currency pair which is going to deliver the best trend. Yeah, just going to pass back to Anna.
Just want to end with the Euro Aussie because we have congestion on the 3-minute, and we look at the 3-minute CSI. We can see the line, the euro going moving higher. There's also going to be some kind of reversal for the euro. It's very, very overextended on this time frame, but certainly at the moment not against the Australia, because the Australian is also rising. So what we tend to do is we then look at the lines, at the currencies at the bottom. And certainly if you were a very fast trade scalping trader, where you're looking at the ones, the Renko 1 minute, a 2 or 3 minute chart, well, you know, there may be some a nice opportunity setting up there. We know it's in congestion, moving sideways, because it's rotating around the volume point of control. We look at the 12-minute chart, and what do we see? We see the euro moving again strongly higher, but the Aussie is also, you know, if you can see through this spaghetti here in the center, that's also traveling in the same, broadly in the same direction. And what's interesting on the hourly chart is this is the turn that we've had higher in the euro. Let's have a look at 9, which was started at sort of 7 o'clock this morning, and we've got the Australian turning higher at the same time. So if you'd missed all the action thus far, and you were looking at the hourly chart, well, what would you be looking at now? Well, you know, possibly looking at a buy on the New Zealand. So let's have a look. Let's have a look here. We've got, but not against the euro, because we can see traveling in the same direction. Let's put up the New Zealand. Well, we've got the New Zealand yen right at the bottom. How does that reflect on the CSI? And oh, that's really nice. We've got them at an extreme. I haven't got crosses again. Oh, we've had a cross here on. We had a little bit of a cross on the Swiss and the Aussie, but maybe that could be of interest. We've missed that bit of the move there. They're looking a little bit of a reversal there, but at the extremes, it looks like the New Zealand yen, and that is also confirmed here at the bottom of the matrix. So when they're at the extremes here, what you're looking for is, as I said, potential reversals, but it's a slower time frame. That reversal may take some time, and that doesn't preclude you from finding a trade in a faster time frame in the direction of the position of the matrix. What I'm trying to say is you've got the euro news. Let's go back again and make myself clearer. So garbage. Right, euro New Zealand is at the top, still at the top. But we may get a reversal, but not at the moment, because they're traveling in the same direction. If we get divergence, if the euro then turns down here, then we're looking for a reversal. But on the slower time frames, there are always opportunities for trades in the direction of the pair that is at the top. So the euro New Zealand is at the top, waiting to roll over on the hour, but on the faster time frames, there may be an opportunity to join the trend. That's what I'm trying to say, that we see on the hourly CSI. Sorry, made a bit of a Horlicks of that one. I'm sorry, it's a bit garbled there, but I think I know what I was saying, and the indicators sort of speak for themselves, as it were. And in fact, euro Aussie is, yeah, we see here, as I said, on the 3 minute, they've been traveling together. That's still moving higher, that's turned lower, that is the divergence, that is your opportunity there as it moves away from the volume point of control. And we can see that on the Renko as well. There we are. There we are. The horrible sort of sideways choppy price action that we had coming up to the news, and the move higher, the pullback, and now it's still in a bullish phase of price action. Right, that's what I'm going to say. Anything you want to add to that, David? Fine. Lovely. Thank you so much for coming along. We are back later on at 3:15. If you'd like to join us then, we'll be looking at day trading, the US session, which will also include some Forex as well. So if you'd like to come along, you'll be more than welcome to join us, and we're lovely to have you with us. If you're not with us, we will be back next week, next Thursday, same time, same place. If you're not coming along later on, have a great trading day, stay safe, and we'll catch you next time. Take